at a trade sale, all of us. Okay? What were the worths? What were the valuations? We want to know that. We want to know how much were these companies being valued at when they were raising capital, typically. So you're in the same ballpark. I mean, there's no point saying, if I said to you, hey, guess what? You can be pre-revenue and be valued at $1 billion. Not so much. The examples of WhatsApp and so on, well, yeah, if you start adding, 1 million users a day, then of course you can have pretty much any valuation you want. But for the vast majority, pre-revenue, and it's rare that you get a pre-revenue company looking for capital outside of friends and family, but the typical valuations we saw in our data for pre-revenue companies, and there'd still have to be something pretty special about them. Just think about it, pre-revenue. Why would I take the risk? The most important due diligence I as an investor would have in a company is that a customer has paid good money to buy their product. That's the best due diligence there is, not what my lawyers might do or my accountants might do. The best due diligence is somebody out there has bought their product and not their mother. Somebody has bought their product. If it's pre-revenue, that's not even happened. So it's going to be rare they're going to come to me where I'm not a friend, I'm not family, I don't love them, why would I give them money? But the ones that did manage it, where there was some other special metric, whether it was the rate at which they were just acquiring people using their product without paying for it, because it's pre-revenue, like a WhatsApp, the valuations typically were from $500,000 to $1 million. So pretty low. My point being, if you're pre-revenue and go around saying you're worth $10 million, not only are you making it next to impossible to get an investor because you're pre-revenue, it's not friends, it's not family, but you're way out of the ballpark of what I ever hear anyway. And of course you're going to be the next Facebook. But if you haven't even got that additional metric of 1 million users or whatever that other metric is, then think about it. You're going to be going around a hell of a long time, and I've seen it with people. And the first thing, by the way, angel investors, they won't tell you this. The first thing they're trying to predict is whether you're crazy. Seriously, there's a lot of people who are entrepreneurs in our community who are hidden insane. Okay, so the first thing they're trying to judge, I kid you not, is whether you're crazy. The second thing is whether they like you. Because if they're going to invest with you, they really don't want to meet somebody they don't like day in, day out and deal with. And that's the honest truth. They won't tell you that, but trust me, the first thing they're trying to evaluate is whether you've got a little bit of crazy going on in your head, because it happens a lot, where the number of people I've met who said my company's worth 10 million, I haven't got a single sale, I've got no users, nobody knows about it. And some of you might be looking at me right now going, no, but Alpesh, really mine is. Okay, I'll be polite, so will all the angels, but it's going to be a tough sell, unless you get that other third metric, which is million users, traction, or something. Or you say to me, you know what, I'm a professor at NASA, and this happened with us, one of our investors I'll tell you about, and I've got this intellectual property, and it cleans air in small confined spaces, removes smallpox from underground compartments or dirt from hospitals, and increases hygiene immensely. Guess what? I haven't got any money to create the prototype, but here's the proof from the academic studies I did whilst I was at NASA, because when they used it on the space shuttle, it made fruit last longer, for instance, which is why they invented it. Okay. Then you say 10 million? Yeah, okay. But you pull NASA out of your back pocket. So you get the idea. Beyond that, it's going to have to be some amazing, amazing credentials. I'm not saying it's impossible, but just know the task that has to be done and try and look as credible as possible. Okay? So that was one of them. Hottest themes that we're seeing at the moment, and what we saw with the ones which made it big. By the way, after 3 years, 90% in the general economy, 90% of startups fail within 3 years. Okay? That's the same in the UK as it is in the US. And it'll be the same in India. If not higher in India, because on every measure, it is harder to do business in India, on every common measure of the things that we measure when we say harder to do business than it is in Britain.
97 is what I've read.
For India. So that just proves that it's even harder than I thought. So, 90% in the UK fail within 3 years. Of the companies we've brought in within the Global Entrepreneur Program, it's the other way around. 90% are still in business after 3 years. So we have a very high quality threshold. We handhold them, and that's fine. We sort of cherry pick and so on. By the way, that's not to say that anybody who's not part of the Global Entrepreneur Program, which is what this is, the deal maker program that I'm talking about, we don't help. The government is far bigger than just the deal maker program. We have other, we have lots of colleagues who help companies set up in the UK. But it was the other way around when they had the government assistance. Now the funny thing with the UK is, it's the government helping businesses. Most countries, and it might be the case in India, most companies want to stay a million miles away from the government looking to help them. I mean, the old joke that Ronald Reagan used to make is I think it's 10 or 11 scariest words in the scariest sentence in the American language or in the English language spoken in America is that, hello, I'm from the government and I'm here to help. But these are the companies that have done the best, the ones who've worked with government. So, what were the themes? What were the characteristics? I say. Let me continue a bit with that. They tended to be, when picking sectors and themes, they weren't sectors which, when we looked at these companies, they weren't sectors which, when you looked back, you could say, oh yeah, obviously. Let me explain that in more detail. You might think at the moment social networking and online gaming is the hot thing to be in. You might say, actually, no, Alpesh, social networking is so not the hot thing to be in because it's been done to death and we've moved past it. But let's assume you did. The companies that we saw which were successful, at the time we came across them, were funnily enough not in the most fashionable sectors at that time. Now, if you think about it, that makes a lot of sense. Because if you're coming to any investor or you're launching at a time when something is already fashionable, it means there must have been a huge number before you. It must be a crowded space. You're pretty late to the party. I'll tell you which themes we're seeing at the moment, which you might want to stay clear of, and others you might want to get into, if you can afford to take that pick any sector approach. Most people didn't take a pick any sector approach. They weren't top down. They weren't an entrepreneur looking for a business. What we found, the vast majority were bottom up. In other words, they were already in a sector they knew a lot about. They had networks, they had friends, they had some skills, they had know-how, they had some speciality. That's how they ended up where they were. There were very rare instances where it was purely an entrepreneur who said, well, I can pick any area. Which area should I pick? Okay? So it tended to be that the vast majority who succeeded, who got on the podium, were doing something they were already a part of. It was something where they didn't say, oh, you know what? They weren't opportunistic in other sectors. Okay? The ones that we're seeing at the moment do very well in the listed markets, the sectors which are the most fashionable at the moment, which are doing very well, which is why you may not want to get into them. There's two ways of looking at the data I'm going to give you. If you've heard about them to death, you may not want to get into them because you'll say, well, that's clearly very, very crowded. If you haven't heard of them, and I'm going to give you some figures of how well some of these sectors are doing, you might think there's a lot of space for bringing this to India, and from India, improving either on, you're only ever going to, in any business, you're going to only ever compete on two things, price and quality. It will only ever be those two things, price and quality. So, what will happen is you might say, well, actually, tell me some of the sectors that you've seen doing incredibly well in the listed markets. Where you've not heard of them in the subsectors, you might say there's an opportunity to improve on quality or the pricing and take these global from India. But where you have heard of them to death, like social networking, if I said to you, guess what? The social networking sector, companies listed, are up 100% over the last 12 months. Yeah, and guess who's in them? Google, Facebook. Really? Is that what you're about to launch? No. So that's the point of the data I'm about to give you. So what we found at the moment, and some of these won't even be applicable because you don't do them as a startup. But the ones that we've found at the moment do incredibly well, the companies that we've looked at, the tablet sector, but semiconductors within tablets. So we broke that down into the screen manufacturers and so on. That might not be relevant. I'm going to give you data. Some of this might not be relevant for what you're looking at. But the semiconductors within tablets, about 20 global manufacturers listed in the US, and virtually all of them are just going through the roof, which tells you something about the tablet market generally. Okay? Biotech was research and development. Again, might not be relevant for most of you because you're thinking it's not the sector you're in. Within that, autoimmune disorders. Growing. It's not there because it's fashionable. You go to somebody, if you've got a speciality in that area, you know somebody who's got a speciality in that area, that looks like, and you can imagine the mega trends this is part of. But this is what we're seeing at the moment. Companies doing very well, and when they're doing very well in the public sector, they tend to be able on the private sector to raise capital off the back of it, as long as they still meet all the other criteria, such as the intellectual property, something different, they're going to be able to compete on price or quality. Flights. But within flights, it's the aircraft leasing subsector. Again, these are US-listed companies. Usually the trends you can bring across. Online gaming. Has anybody heard of, for instance, we hear about online gaming. Anybody heard of a company called Shanda Games? Shanda, S-H-A-N-D-A. Well, it's a $2 billion company, and last year it went up 122%. This is what I mean when I say there's some sectors which we might not heard about too much, but they're doing incredibly well. So we've heard of the main sector, the online gaming, but the subsector companies, any economist will tell you when any company is making larger than normal profits, they're begging to invite competition, somebody to cut back some of those margins and make a hell of a lot of money from them. And I say, it won't be somebody saying, I want to get into social networking, compete alongside Facebook and Google. It'll be somebody saying, well, this Shanda Games with $1.8 billion market cap able to double when it's so big. Big companies don't normally double in price in a year. Small companies do, big ones don't. What kind of games are they doing? What sector are they in? How come they're getting so much of the pie? I want a bit of that action because I know the main sector they're in, online gaming, makes money. And they're an American company. I haven't heard of them, so they're not already in India. It's not like I'm trying to create another Naukri.com or something. Is there something here that I should be looking at that they're making money in? Digital dollars. So everybody in the digital dollar sector. Okay, digital dollars is the subsector is processors. So the processors, not computer chip processors, processing of your payments. There's a company called TSS. Have you heard of TSS? You won't have done. I hadn't heard of it before I looked at this. $6 billion company. It's a $6 billion company and we haven't heard of it. $6 billion company. It was up 40% last year. Pretty impressive growth for a company which is worth billions. That gets my interest going in processing. Digital dollars. But with digital dollars, it's the processors, not the other subsectors within it, which are doing well. Because sometimes you get subsectors in these verticals where there's a lot of competition, then there's not much in another area. Okay? Diabetes, or under the sector of fat. Okay? Diabetes, well, we know it's a huge problem in India. It's going to be a continuing problem around the world, for sure. So there's a huge mega trend. The diabetes drug companies, and pretty much everything surrounding diabetes, those were strong, the company performances of the listed companies. What was weak in the fat, on the basis that we're all getting bigger. Okay, you'll have read all the global trends are, we're all getting bigger and bigger and bigger. The one which doesn't make you money, though you wouldn't believe it if you watch late night TV in India, is weight loss drugs. Virtually all the listed companies which make weight loss drugs are not making money. But can you believe it? There's actually listed companies that make weight loss drugs. They managed to get through the FDA, all the regulators, and they've got the adverts on TV. They've been losing wealth. Okay, health, in terms of health, healthy foods, big trend towards healthy foods amongst the urban elite, those who can afford it. You want to be a food producer. which surprised me, because the food production companies are the ones making the money, not the grocers. Guess what everybody seems to be focusing on in India? Not the production side. They went, oh, we're going to be grossing. We're going to be getting the outlets out there. Globally, that's not where the money's being made. It's not the grocers, it's the producers. Software as a service, e-commerce. That subsector, everybody within, we looked at software as a service, the e-commerce companies. Now, that sounds like something out of 2000 or 2001. And what we found with a lot of these were the things which were fashionable. Then they went out of fashion because everybody stopped talking about them because it got old news, it got dull. And guess what? They then became interesting again because they had a second life and they continued. I mean, if you look at the share price of eBay, how it went from the euphoria to how dull to now going back up and up and up, it's the same old story. Or even at Facebook's the same old story. I mean, social networking, we used to call it bulletin boards. I mean, they all existed before. Then everybody forgot about it, and somebody came along, tweaked the design a bit, and hit the jackpot. So we found that one. Cybersecurity, more of an issue outside of somewhere like India, more a Western problem because of privacy issues, and privacy is going to continue as data increases. You saw the ruling about Google that the European Court of Justice ruled yesterday that we have a right to be forgotten. So cybersecurity, companies. I'm not just, by the way, I'm not giving you sectors where I think you should look at these. I'm giving you data that we found of companies which are listed, which are creating wealth. Their share prices are going up based upon their earnings and their revenues. In other words, they're picking at low-hanging fruit at the moment. They're creating supernormal profits. They're getting more of the cake that you all should want, than they deserve. Okay, so cybersecurity, not necessarily the sexiest of sectors, but right across the board, anybody to do with cybersecurity, there's all sort of technical terms, endpoint solutions and network solutions, and all the rest of it. It's pretty much across every subsector. In other words, not a lot of competition. Junk food, again, across the board. We saw there everything from the retail outlet to the manufacturer. Food inflation, how do you play the food inflation? With food inflation, it was the subsector. So as food prices rise around the world, we've seen this. The subsector which caught our eye, which was making, the companies were making supernormal profits, were protein powder manufacturers. For those, some of you might know this. God knows I'm one of their biggest customers, being Gujarati. I sort of have the physique of, sadly, of Mahatma Gandhi. There you go. And protein powders is apparently what you need to build muscle. I'm still waiting for it to happen in my case, but it's a huge trend in the West anyway. And if those trends move over here, and I haven't seen I've seen some of the stores, but I haven't seen somebody go big into this. I was in Amritsar, and as you might expect, you do see more of it there. Punjabis tend to be far more into their weight training and so on. But it's a trend which might come about. Anyway, protein powders, we saw some of the listed companies doing incredibly well. Tyson Foods was an example. You might not have come across it. Gambling, equipment manufacturers. Now, there's a lot of stringent requirements in India, but the equipment manufacturers, everything from the kinds of, if the laws do loosen, then those were doing very well. Some of this might not be translatable into India. I'll come back to India and going global in a second, of what we found with the companies that did the best and what their attitudes were to being global, their strategies were to India, UK, and the world in a second. Vanity companies, just two more. Vanity companies. Jewelry did very well, as long as it was strongly branded. Funnily enough, I'm surprised about this, because again, as people get richer, they want to spend more on vanity products. Beauty products didn't, despite how huge that market is. And if you looked at TV adverts, you might think the opposite. Beauty products, those companies were just on a downward slope, and it might be a whole host of reasons that might be the case. But just to let you know, that was the case. Travel, auctions bad, e-travel good. So Priceline good, eBay, and I don't know why eBay came up within our travel subsector, but it did. It might be that people re-auction travel somehow, but the auction side didn't work, but the Priceline, and those of you who know all the problems Priceline went through the years will know, again, it's one of those which was fashionable, then unfashionable, everyone forgot about it, and then it started doing great things again. Okay?